Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, April 1st, 2009. Well, today being the first day of the second quarter of 2009, got started on a rough note this morning with an initial gap down in the markets. And what we basically saw was a little fear from the carryover selling late in the day yesterday. And what you're looking at right now is currently my intraday 10-minute SPY spider chart. And what you can see here is the massive sell-off that took place really over the last half hour of the day yesterday carried over to today. And what we saw is a gap down on the charts today, a pretty ugly open with the Dow down about 100 points. And right from the opening move here, you saw a pause candle, a little bit of a pullback, and then the market started to race higher. And it was really a beautiful move up as the market raced higher for many, many candles, pausing really on this 50 moving average, at which point it then took off even higher, causing a couple little topping tails to form, and it was only a minor pullback. And what I really want to focus on here on this pullback is the pattern. Remember, folks, at InTheMoneyStocks.com, we pride ourselves on being one of the only trading firms or trading educational firms out there that focuses on price pattern and time and technical trend line analysis. Very, very rare to find anyone out there. And what I want to show you really about today's trend line here and the trend lines is not only these trend lines up here, but the pattern that you got here. Notice the pattern. What pattern is this, folks? This is a bullish flag pattern in spirit of bull flag. Beautiful bull flag pattern off of a major move up here, and as you can see, consolidating, coming right into a necktie, which is a cross of two moving averages. Beautiful cross here, folks. Absolutely fantastic cross, and what you saw off of that was another move higher. And where did this market go off that move higher? Right up into the 200 moving average, which was the major resistance yesterday over here, which caused the fall. So we basically top out there. You get another pierced tail and another topping tail, which is a very bearish signal. And then finally the market can pull back here beautifully. And just continue to watch for that pullback, folks. You can see the market came almost all the way down to the 50 and the 20 moving average again and is now getting a minor bounce back up. Now, I'll go over all the support and resistance lines on this chart, but I did draw on a couple levels across the top of the chart that I really want you guys to pay attention to. These are the big ones, folks. These are the ones that are going to make or break the day on the upside, and I really do want to go over them. So let's start, first of all, with talking a little bit about where this market sits. First of all, as you can see, we're having a nice little up day. The Dow is up about 75, 85 to 85 points right now. NASDAQ up by about 12, and the S&P up about 7 points. Just about 1% across the board, really. And the key about today's activity, again, notice the pierce of the 200 moving average. You got to understand your major levels. In addition, notice this pivot. See this little pivot right up here into the 200 yesterday off of this move down? That's a key level to draw on your chart. So take that line, draw it straight across. In addition, take your top from yesterday, draw that across. And this up here, I'll scan back and show you where I get that, is coming right from this gap fill. Alright, this gap fill is very, very important here because if we do get there, that'll be an insane amount of resistance. So watch for that. That's right about 81.30 to 81.50 on the spiders. That would be a major, major resistance on the upside on the intraday charts. Now I'm going to go back and show you another chart, and notice here where this line comes from. If you take the low on the 25th and connect it to the low here, or actually the high on the gap down on the 30th, and then just extend that line, you're going to notice that that line comes all the way up here and crosses right above the 200, exactly where the market went. So that's another thing to watch for, folks. You have to watch for that. Very, very important to know where these trend lines go. And notice how you have the 200 moving average, this trend line sloping up, and this sideways trend line all coinciding around this area. What that's telling you is there's a high probability of a shorting opportunity in this market. Very, very high opportunity of a shorting market here. Absolutely right at those highs. And you guys can see the result of this off of that move. Now, should we move back up, you'll have resistance at the 200 again, which currently sits at about $80.70. Then you'll move up right into this level here at around $80.80 on the spiders. And if you break that, you're going to go to this double top right up here, which is approximately 81.10, 81.15 on the spiders. Should you break that high, your next major, major level to watch would be 81.30 to 81.50. That's that gap fill area going back multiple days from that big gap down we had on Monday, all right, from Friday. Now, again, folks, what I'm seeing in the charts right now is a very near-term extended move in the markets to the upside. You're now getting a pullback. We'll see if this is a bullish pullback with a race to the upside a little later today. we'll have to continue to watch this. What you're going to see is major support right down here, guys, and I'll draw this in. But just one thing about this line I'm drawing in, it does not stay still. The 20 moving average and the 50 moving average are sloping up. Every candle on my 10-minute chart, they will continue to move higher, and you have to remember that. So right now, you have good support right around $80.20 on the SPY. However, every 10-minute candle, that'll inch up a little bit, so just continue to follow those as support. That will be good support. If it should break, then you're going to look for this pivot. Notice this pivot right in here, where you pivoted down, so really right around here, which is just a little lower than that area. And that level would be around $80 to $80.10 on the spiders. Anywhere from $80.10 down to $7.70, $79.90 would be very good support. Really, I'm seeing right in this cross, where I'm making this cross, very good support in this market. All right, again, that's from about $79.90 to about $80.10 on the spiders. Now, this level, should you break, then you're talking about a nice solid move down in this market. And again, what I'm seeing is you'll have a minor level right here, minor level right at $79.75, and then your next main level will be right here at the closing level from yesterday, which is around $79.50. Alright, so those are your levels to watch. If you were to break this $79.50, then you're talking about possibly moving all the way down. You should have a little bit of a minor level right here. Alright, that'll be a minor level there, as well as right here. Two other levels. And again, ultimately, if you keep selling, you're looking at the lows of the day. I don't necessarily think we'll do that. We have the mark-to-market news on the horizon. We should hear if they're making any changes over the next day or so. The G20 meeting's going on. I don't suspect that they'll jump this market out too hard until we hear a little thing from the mark-to-market accounting perspective and also from the G20 meeting, see if there's any consensus on pumping any money into the global economy, that is. All right, so that's really what I'm seeing now, folks. As of now, this could be looked at as a slightly bullish pattern off of this big up move. So just be aware of that. You may have a little bit of a bullish pattern developing in this current pullback. However, if we were to break this level right down there, you're going to start hitting these on the way down. All right, this level is very key in my book. This basically approximately $80 on the SPY, but anywhere from $79.90 to $80.10 would be a very key level on this market. You get below that, and then you start to be careful here on the downside, as you could start to hit these lower support lines. Alrighty, now let's go to the 60-minute chart quickly and talk a little bit, because there's some really fascinating stuff that I want to point out. Now, one thing I want to show you is, notice the low this morning on the gap down. There was a reason why you knew this was a low, and I'm going to unveil this trend line that is probably one of the most impressive trend lines over the last few days we've shown you. Take the low from the 20th, connect it to the low from the 30th. Alright, so we'll connect those lows, and look at that. See the tail right to that level before a rally to the upside? That's exactly things, these are the type of things are the things you have to be doing for yourself on your intraday charts. You have to do it, no doubt about it. In addition, you can see all our key levels here. Here's the double top area, here's where we went into. Right, notice how in addition, alright, notice the 50 moving average on the 60-minute chart is right here. Alright, so notice how we showed you on the 10-minute chart, you had the 200 and major trend lines. If you add that together with the 50 moving average on the 60-minute, you know you're into a major resistance level, and the market probably cannot get through there. That's a very heavy resistance level, and sure enough, look at the pullback on the 60-minute chart starting. You have a nice little topping tail, in fact, right at a double top resistance, near a double top resistance on the 60-minute spiders, and look at the pullback you're getting. Right now, this could be considered a bullish pullback as well, but it could change that should it pull back more and more here, and we'll just continue to watch it. Right now, the market is really coming in nicely. The Dow is only up 68 points, the Nasdaq up about 4.5, and the Nasdaq up 7.5, and the S&P up about 4.5. So we are seeing a nice little pullback. Again, this is your target. Should you break the double top on the yesterday's candle, your target would be gap fill, which again, as I mentioned, was right around 81.30 to 81.50. Right here for this gap fill. But again, as of now, you're looking for continued pullback, maybe a consolidation pattern. We'll see if it shapes up. You'll have to join the intraday stock chat to know exactly what our afternoon feelings are on this market. In addition, folks, I do want to strongly encourage you to join our research center. We give about 5 services in there, including the nightly videos, which are 25 to 30-minute videos focusing on the spiders, the markets overall, the gold, the oil, the dollar charts, Goldman Sachs, JP Morgan, all these different charts that we come up with, and we analyze them on a purely technical basis. We talk about psychology of the markets as well. It's a great way to understand and get guided on the markets, as well as really getting the understanding and the educational side. We're all about teaching people how to fish, not just giving the fish. All right, that's the key, folks. Have a wonderful rest of the day. We'll talk to you tomorrow. Take care.